Christina?
Yes, hello, hello. How is
Hello.
everyone? Good morning. Can you hear me all right? Are you able to hear me?
Yes, we can hear you.
Yes.
Okay, wonderful.
Yes, we can hear you.
Good morning. My name is Christina Martin. It's been a pleasure conducting and co-facilitating this financial literacy workshop. This is our fourth part of the workshop, and it's bittersweet. Honestly, I have had the pleasure of passing out flyers in my community about this event and hearing the overwhelming response of how much this is needed and was timely for a lot of people. And the future goal is the opportunity to do this ongoing, whether it is quarterly or even at minimum twice a year. So we will keep you posted on that. The best way to stay in connection with resources like this and similar topics, make sure that you are connecting with Best Start AV. They are on Facebook as well as Instagram, and you'll be able to make sure that you register for the other phenomenal workshops and really just those important talks that need to happen within the community to seek change. So I'm just again honored that I was considered and extended this opportunity to share. And I'm going to figure out how to share my screen again and get this all queued up. For now, I always just like to see who's in the crowd. I'm just gonna take a quick look. I see a few familiar faces and new faces. And if you can put in the chat area, there are the first question that I have for you to answer is your filing status. So when it comes to taxes, because today is all about taxes, I just want to know who's in the crowd. Do you file single? Do you file married joint, married separate, head of household, widow? Those would be the basic 5 categories. And then I'll come back here with my screen. Let me actually pull this out. And I'll take a look at who's in the crowd, because I want to definitely cater the conversation to who is here. Okay. That. And now I'm just looking for the chat box. I don't know if I'm able to see the chat. Okay, LaQuenta, are you able to help me with the chat area? Give me some feedback, because if I go into my full screen, I can't see.
Absolutely. I got you.
Okay. Awesome.
So right now, there are some participants who are filing single, 2 head of household, 3 head of household, 3 married, and 3 single so far.
Oh, okay.
Yeah, we got a mixture. We got a variety buffet.
Thank you. And okay, so this gives me good insight. So just an introduction. This is the ABCs to financial literacy. And as I've introduced myself, I'll reintroduce my sister LaQuenta Martin. who is an enterprise consultant and emotions coach. And so we have just partnered together with facilitating this workshop. Just a recap over what was covered. We covered the basics of budgeting. We went over the spending spiral, emotions and money, the financial flex family edition, and today is the tax toolbox. And all of these, again, you can find on YouTube at Best Start AV and catch the replays of those if you need to go back and whether go back, take notes, go and share it with someone, add it to a playlist on your YouTube, and just build that box of resources for you when it comes to building your finances. So during today's topic, we are going to go over pretty much a lot of the fundamental things to know when it comes to taxes. And some of the questions we'll be answering along the way is, when do you need to file your taxes? Where's your refund? Like some people that may be figuring out where, like actually, how do you receive it? Or it may be you don't have a refund and you're wondering what happened to your refund. And we are going to talk about how you are being taxed, which is important to know, and where do you go from here. A little bit of more insight on me and my area of expertise. I am a business owner. I have two companies. I have CTM Connections and Tax Tactics. CTM Connections is a company that deals with business startup compliance services. So whether that is forming your business, creating a bookkeeping system for your business, and just really trying to take away the guesswork in running your business, that's when you would contact CTM Connections so that we can give you just a straight guide on here's what you need to do as a business owner, and here's how you can become successful in a shorter period of time because you have someone of aid helping you. And Tax Tactics, that is my tax firm. It is actually one of the only female-owned tax-approved IRS company here in the Antelope Valley. Being a woman in the industry of taxes is not the norm. And I take pride in the fact that I took on the course of going through the IRS's standards to become an approved firm so that we can file electronic returns. We are open year round, and our main focus of clientele is on the business side. So that is our area of expertise, helping corporations avoid overpaying in taxes. And that, of course, spills into the personal side with helping those in filing as well. So again, I'm a licensed tax professional here in California, but I do service nationwide. And I and my sister have been financial literacy advocates for 6+ years. Hers is probably a little bit more than mine, but for me, it's been 6 years. So I always like to start my conversations off with a quote, and I really just wanted to keep the same quote going forward throughout this workshop, which is by Benjamin Franklin, and it states, "An investment in knowledge pays the best interest." And for everyone here, and for those that are even watching this video at a later date, you are putting in those deposits that are going to build up into a massive account of knowledge that you can pull from to help you increase your financial literacy and your financial household. So I really commend you for taking this time to be here. So let's talk about, where is your refund? And in the chat box, I am curious to know if you have experienced change in your refunds. So if you've experienced a change where your refund has lowered since like over the past 3 years, have you seen your refund lower? Then I would like you to put low in the chat box. If you have received a refund where you have seen an increase in your refunds over the last 3 years, it's continuously going up, then I would like you to write high in the chat. So if you've seen a decrease, you're going to put low. If you've seen an increase, you're going to put high. And then I'd like to, I think I figured out how to see the chat here. Okay, excellent. Great.
Got it?
Okay. Let's see, put this on the side here.
So we have one participant who said, I no longer receive a refund. So low.
Okay. And for many taxpayers, they've seen a change. And the only reason why I'm asking is so that I can really help you understand. You may not have had access to a tax professional where you have been able to get clarity, like what's happening. Like you may be preparing your returns yourself, and you have just accepted the fact that this is what it is, when there could be reasons that are controllable and even methods that you are unaware of that can help change that outcome when you file your taxes. So it does seem to be a consensus so far that there has been a decrease or just it's not even existing in the refund. And I'd like to just let you know about what has changed in the tax laws. So in 2018, the tax laws changed, and this is under the Tax Cut and Job Acts. And what happened was there was no longer, they are no longer extending the option for W-2 wage earners to itemize their deductions. So what this means is if you are an employee receiving a W-2, the only type of deduction you receive is a standard deduction. And we're going to talk more about that, what those amounts are, and really just giving you a number as to what is that standard deduction. And because of that, that hurt a lot of the middle class working people because they are limited on what else they can write off. Maybe you have a home, that is going to be an extension of additional credits for you. Maybe you have a business or you are pursuing a business venture. That is the key area for you to utilize when it comes to opening back up, being able to itemize and deduct related expenses that are tied to the business that helps you lower the taxes that you pay. So I also see in the chat area, one person said hi because they had a child. So oftentimes those dependents do help with increasing your refund up to a certain age, and then that amount that is credited for that dependent does get lowered. So children is almost like the number one reason why people tend to get refunds. And then the second reason people receive refunds is because they overpaid in taxes being taken out from their job. So I always like to strive to get my clients to get to what's called like a even point. And I don't know if you can see my hands, but when you are a W-2 worker and you are looking at that W-4 form which talks about the taxes that are being taken out on the federal side, I like to explain my clients to fill that out to where you are just giving them enough. And when we're filing, you're either getting a couple of $100 back, maybe $1,000. And the benefit to that is you get the money that you need during the year. And then when you get your refund, it's almost like something, it's just an extra. It's just an extra. And you want to get to that medium ground where you are only paying enough in taxes during the year. And when you're filing, you're just getting a little something, just maybe it's like one of those things, you're probably going to put that in your savings account or add that to your emergency fund when we're talking about finances and what to do with that refund that you receive. So I saw this survey that was conducted by the University of Chicago, and it stated that 32% of taxpayers are unsure if they are getting money back or if they will owe. So when we're thinking about tax filing season, which starts as early as January, these taxpayers are never confident in what to expect when they file their taxes. And that was interesting to me to hear, because, well, one, for me, I know that a lot of people are unsure because they don't practice what's called tax planning. And tax planning is something that you do during the year with a tax professional to give you insight as to what to expect when you file. And the whole purpose of tax planning is to help you pay the least amount in taxes. So what I do for clients is we look at your sources of incomes. We look at your pay stubs, see how much are you contributing in taxes, and are you contributing enough? Are you contributing too little? And whatever that is, I give my professional advice to you to implement, so that way, when we're filing, if you owe, it's because you chose that you wanted to owe, versus being told, here's your bill that you have to pay. If you're getting a refund, you will know you're getting that refund because you did X, Y, and Z to receive that refund. So it's being on the proactive side of being a taxpayer versus being reactive when you're not doing tax planning. And I just wanted to share the full survey related to this topic. And this was again by the NORC at University of Chicago, and they asked this question to about 1,067 adults. And so the question was simply, when you file your 2020 income taxes, do you, my screen is cut off. Do you expect, okay, yes, do you expect to get a refund, or do you expect you will have to pay additional taxes to the IRS? And so here were the numbers. 47% said they expect to receive a refund. 32 we identified did not know, and 21% expect to owe the IRS. And oftentimes those that expect that is because they have owed habitually for at least the last 2 or 3 years. So they just accepted that as their new reality. And I'm here to let you know that does not have to be your future. It may have been a past reality, but that does not have to be your future. And the key to that that I'm really just going to emphasize is the tax planning. Any questions on these numbers? Feel free to put that in the chat area. I now can see the chat box on my screen so I could interact a little bit better. Okay. So this is the current tax bracket and tax rates that is currently how it's currently broken down. So there are 7 tax rates, and it's based upon the amount of income that you receive. And these are going to be effective until 2025. So this may be something for you to screenshot so that way you can reference this. Oftentimes, when I am explaining certain things to clients, I realize that these are some of the things that they're not familiar with as far as what tax bracket they are in, why they're being taxed so much, and not even realizing that it does go up to 37%. That was definitely an expansion to the changes. And you are, if you all don't mind sharing, if you can just type in what tax bracket you fall in. Is it 10%, 12, 22, 24, 32, 35, 37? Depending on your category, you look at which column, and then you find your number of the average, and then you find your rate. And this is going to be key to identify in the coming discussion. And so this 22 to 24, you all are considered the middle class. So just so you can identify what class you're in, and you are that there's a huge group of people in that area, and you are actually the reason why we are able to receive things like government assistance. You all are the biggest contributors to government assistance programs, things like the stimuluses that were sent out. It came from the middle class taxpayers who pay their money. Their money went to those that needed a stimulus. I'll just put it that way, financially. And of course, anyone above that 32, 35, 37, they also contributed, but it's less amount of people that were paying that amount. So I just wanted to help you identify as a bigger picture what is going on economically and how that affects your taxes and finances. So we have 3 for 22%, and I saw 2 for 24%. Thank you for sharing. Thank you for sharing. So the reason why I am breaking down that tax bracket is to help you learn even more that how you earn is directly related to how you are taxed. And so remember when I talked about the employee, that employee are the W-2 earners. And this is an image of the cash flow quadrant, which is a concept by Robert Kiyosaki. And it stems from his book, Rich Dad, Poor Dad. So for those of you looking to build your library of financial literacy, this is a great one to add. And so with the employee, you have that 7 range of tax brackets that you are being taxed at. And you only get your standard deduction for tax credits. And then if you have things like I mentioned, your dependents, maybe you contributed to retirement, that helps you with lowering the taxes you pay. You have a home that you own, you get credits for that. And let's transition into self-employed, because when you get into the self-employed area, you are able to begin to itemize some deductions. And those deductions are related to a business that you have started. And this is more specific to sole proprietors that are business owners when you're in this category of self-employed. So do we have any sole proprietor business owners here in the audience? You can just type Y for yes. And I want to know that because I want you to be aware of some other taxes that are being applied to you as a sole proprietor in addition to the tax brackets. All right, so okay, great. And if you want to share your business, feel free to type your business name in the chat area, and maybe there can be some networking opportunities too in that chat area. So as a sole proprietor, you are being taxed as self-employed. And self-employment tax is 15.3%. And when you are taxed that, it is a double tax situation that you are in. So you have your tax bracket, and I'll just switch back to the screen briefly. You have your tax bracket ranging from 10 to 37%. And let's say for the year, your business just made just under, for easy math, you made $9,000 for the year, and you're in the 10% tax bracket. What that means is, as a sole proprietor, you're going to be taxed 10%. That's the first tax. And then you're going to be taxed the second time of 15.3%. So when you do the math of how much taxes you're paying 25.3% as a sole proprietor in taxes. And so that number does go up the more money you make. And oftentimes what you may have experienced as a sole proprietor reporting your taxes is that you owe money and you have your write-offs. However, you may not be knowledgeable in the sense of what are all the write-offs you can deduct on your taxes. So what that means is, because you are in the position where you are self-employed, yes, you have the opportunity to write off these business-related expenses. However, if you don't fully understand what those expenses are, you're not going to report it, and therefore you owe. And in that situation of being in a sole proprietor position, oftentimes that is the main area that seeks a professional to guide you through that. And it all comes down to your record keeping. So as a sole proprietor, and we're going to go into the B area as a business owner, record keeping and revenue management. So knowing what money is coming in, what money is coming out, plays a crucial role in how your taxes are going to result. Because if you're not keeping track of what you're spending and where you're spending it and what type of category, you're not going to report it. And that means you're going to have more money from that source of income to tax. So I am pointing these things out because it's oftentimes just not discussed, especially when it comes to having that opportunity of writing off your business or your business venture. And then when it comes to giving the numbers as what took place during the year, that's where it's like, oh no, I don't know. And so it becomes toilsome, and it becomes a chore to file your taxes. And even there are times where people are just like, no, forget it. I'm just not even going to report it because I don't have my records together. And I just don't even want to deal with it. But that too is not the answer, because again, if you are an employee as a W-2 person and you did not pay enough in taxes on your W-2, one, we know we can forecast that you have a tax bill. And let's say you have a business venture, you provided graphic design, right? Outside of your W-2 job. You want to report that so that you can write off the expenses of that business to help lower the amount that you owe from your W-2 job. So this is a huge secret that is buried in the tax codes that you can utilize as a taxpayer that is not widely talked about. So you want to report that side hustle and that business that you do every now and again throughout the year to make extra money to help lower the taxes that you did not pay as an employee, and to potentially give you a refund. Do I have any questions related? You can come off mute or raise your hand to get any clarity for what was discussed, because that may have been an earful on
I- Christina,
Yes.
I appreciate how you're sharing this, with the group. And in the chat, there's a comment that says, I struggle to keep up with everything. And I can just feel that emotion of, feeling overwhelmed or not feeling like there's a readiness when tax season comes around. So can you talk about how tax planning maybe, helps it not to seem like a daunting task at the end of the year or as you're preparing, and how it becomes more organized? I think that may help.
Okay. And thank you for pointing that out. And I was just wondering, yeah, okay, so it's your first year as a business owner. And I don't mind spending as much time as we need on this, because there were a lot of entrepreneurs that developed through the pandemic. And it was simply because you knew you had a skill, you knew you had a talent that you could monetize. And it was just really just time, like, okay, here we go. I need to monetize this now. And so 2020 taxes and 2021 taxes was a huge kind of an earthquake for a lot of taxpayers. And so when we're talking about how to get a better grip on keeping up with everything, the first step is we're going to focus in on the tax side. And when we're talking about your business, you want to make sure that you have some type of software, spreadsheet, or Word document of where you keep track of your income. This is going to need to be at minimum a monthly task as a business owner. And what that means is you were going to write down how much money you made for that month and on that spreadsheet. And then when it comes to the expenses, you're going to need to go and look at what you spent your money on. There are typically about 20 categories that you can find online. What are the top 15 business expense categories, right? So that's going to give you an idea of what are the categories and what are the numbers you will need to plug in for that month. And when you take things on a monthly basis, it allows you to, one, remember if that was a business expense or if it was not. And so you're able to calculate what number goes where on the expense spreadsheet or Word document. And that's just starting out, because where you would want to get to is having a software that helps you, give you suggestions on categories. So things like we have QuickBooks. That's something that I personally use and have become a registered QuickBooks Pro to offer bookkeeping services. And there are other things like, I believe there's Xero and HoneyBook. Those are other platforms that you can use to add in your business account, which is key to have. If you're a business owner, you need to have your designated account for that business so that you can calculate things more streamlined. And that is also the problem with this category, self-employed. When we are trying to calculate expenses, oftentimes that self-employed individual only has one account, and that account is for business and for personal. So that makes things, of course, difficult as well. So at minimum, if you can create a separate checking account for your sole proprietor business, and that account is for your business, that alone is going to give you peace of mind and clarity in regards to what needs to be reported for your sole proprietor business. Now, if you're in the business owner section, we are no longer commingling money. You have your personal account and you have your business account under the business name. And anything business related comes from the business account. Anything personal related comes from the personal account. And let me talk about the taxes for business owners. So I'm just going to focus in on California, since that is who we have in this room. And when it comes to corporate taxes, it is 21%. So you have a flat rate of 21%, and that is applied to the profits that is being reported from the business. And I like that option much better than being a sole proprietor, because as I explained, sole proprietor, you get taxed twice, income tax, and you get taxed on the self-employment tax. And as a business owner, you get taxed once at a flat rate. So it's controllable. You can project, okay, if I made 100,000 in profits, then I can expect to have a tax bill of about 21,000. However, if you're tax planning, you're not going to pay 21,000, because you're going to implement certain practices within your business to lower how much taxes you pay. So it gives you more control over how much taxes you pay when you're taxed as a corporation. So an example of that is an LLC, which is taxed as a corporation. You have your your S corps, which is taxed as a corporation, and your C corps. Those are all corporate business type accounts, or type business types that are taxed at a corporate tax rate. Self-employed, some examples of that are those that have DBAs, doing business as. So doing business as is basically me, let's use me as an example. Christina is doing business as Christina Floral Arrangements. And so it's just letting the government, the IRS, I'll put it this way, the IRS and the state know, hey, right now I'm putting on my name tag, Christina Floral Designs, to make this money. But on the tax perspective, you're still being taxed as an individual. On the corporate side, as a business owner, you have a business name, Christina Floral Designs LLC. Under that LLC, I have an EIN number, an employer identification number. And what that means is it gives me a separate number or identification number to use to earn that income. So that income under the LLC, which is being taxed as a corporation, is going to be applied under that EIN versus my social. And the benefit to that is, as this income for the EIN comes in, it's not going to be taxed twice because I'm taxed as a corporation. I'm going to get taxed the once, the flat rate of 21%. Is that helping anyone in the crowd?
Christina, you are breaking down lots of good nuggets. And what I did as I was listening was attempt to summarize the concepts you're sharing into some steps. 1, 2, 3, 4. You know, I know that it may be overwhelming for some of us who are either have put our toe in to the business side of life, but maybe we haven't designated it, because you just explained it's almost like separating with an actual number, an entity number. So in the chat, I attempted to capture what you were sharing, because this is very high level. We're talking about the tax code and breaking it down into our actual lives. How does it work for our budgets? And we get to see it in our own bottom lines. So the business account, even just having that, you can't open a business account until you have the business entity and name. Or can you do that with the DBA? Can you explain if that's even possible?
Yeah, so you can open up a bank account with a DBA.
Okay.
So yes, you do start with the name of the DBA. What are you going to be registering? Get that registered on the local county level as a DBA, and you will open up your bank account. And so on the tax side, I just want to try to make it as simply understood. When you have a DBA, it's money reported to your social. And when money is reported to your social, you are taxed according to these brackets. And you have this bracket plus 15.3% for the self-employment tax of being a sole proprietor. I just want to, I'm bringing information and informing you of that in case you did not know. And if you're wondering, how do I stop getting taxed twice pursuing business? The answer to that is by having a corporation. And the difference between sole proprietor and business owner is you have registered your business on the federal level and the state level and received an EIN. And under that EIN, you have let the government know, please tax me as a corporation. So that's all a part of the business formation side. To give clarity to that, a DBA is only filed on the county level with your state, and so whatever county you're in, you register your DBA, and you can get an EIN number for your DBA, but just know that you're taxed under your social, so you're subject to double taxes. When we are reporting the taxes, I'll get into that since there are quite a few more questions on that. When you're reporting your side hustle, because I think I saw that in the chat. Let me go back to that particular question.
Yes, there was a
I have
question.
a side hustle that is not official. Where do I start in order to claim some of my expenses for next year? Great question. If you have a side hustle, you will be utilizing basically a Schedule C when it comes to taxes. You'll be utilizing a Schedule C to report your side hustle income and to claim your expenses related to that side hustle. So that's where you would start. And that involves keeping records of that side hustle. And really just getting into that mentality of it's a business. Take a little bit more ownership so that way you have the motivation to keep the records in place. Because sometimes from my experience, talking to others about side hustles, it's almost like they treat it as a hobby. And oftentimes with hobbies, we don't pay attention to how much we're spending, how much we've made providing the hobby. You are just passionate about providing that skill or that service or product, and you're just grateful somebody asked you to do it or provide it for them. And so you're going out and buying this and having expenses, right? But you forgot, oh, for taxes, I need to make sure that I account for the expenses, and you calculate how much money you earned. So I want you to replace side hustle with business, simply so that way you take more initiative to be involved in that month-to-month requirement of accounting for what took place. That's where you would start. All right, and let's see. I'm just scrolling through the chat and I see another statement or question. So does that mean if you're doing business as like a DBA, you still need to form an LLC? Okay. When it depends on where you're at in your business venture. If you already have a DBA and you are realizing during this conversation, man, I don't want to be taxed twice anymore, then it is now going to be, you would be registering for an LLC to be taxed as a S Corp. So that way the DBA is no longer being used. So you would not have both. You would not have Christina Floral Design DBA and Christina Floral Design LLC. That's not what should be happening. You would choose which category you would want to be in. And on my perspective, I choose that based upon taxes and tax codes and tax abilities that I have access to when conducting business. Okay, so if you have a DBA, just again, or let's say you don't have anything, you just have a concept. You have something you'd like to do. You may have been doing it. You haven't registered anything anywhere. If this is something you know that you're going to be pursuing on a long-term basis, at minimum 3 years, like you're going to commit and you know that you're going to put forth the best effort, then go forward and get your LLC, because that's going to position you to avoid double taxes as long as you structure it as a corporation. If you have a business idea and you're not sure how the market's going to receive it, and you're not sure if you're really going to be able to provide the products or services, and you're just testing out the marketplace for your idea, then start off as a DBA. Create that degree of separation from you, Christina. So I'm creating a degree of separation from Christina by forming a DBA so that I can test the marketplace of my services, because I'm not sure if I'm going to do this long term. And that's two different mindsets that you can have when you're figuring out which way do you get started, where do you get started with forming and conducting business. I see another question. For clarity, as a business owner, I only get taxed once, which is a flat rate of 21%. I won't get taxed as an employee, W-2. Okay, let me help you understand that a little bit better, Jordan. If you have a business that is taxed as a corporation, so this is a federal and state registration of a business. Let's just keep a simple LLC. When you have an LLC, you can be taxed two different ways, because this may be a disconnect for people. When you file for an LLC, you can be taxed as self-employed or a corporation. I encourage my LLC owners to be taxed as a corporation so that you get the flat 21% and not the double taxes as a self-employed person running an LLC. Hopefully that clarifies that. Now, when we're talking about taxes as an employee, no, there are taxes as an employee. And that is on the federal level and on the state level, if your state has taxes, which we know California loves their taxes. So there are taxes on the federal and on the state level. This bracket area here, this is the federal tax bracket. State tax brackets, it ranges just like how it does here, in the sense of the amount of income. However, you can basically say anywhere between 10 and 15% are typical state taxes, and it just depends on how much money you earned as a W-2 that needs to get paid. So that should clarify the taxes as an employee. You get taxed as an employee. Now you can go exempt. You can go exempt with your taxes as an employee, which means no taxes will be taken out. However, just know you better have some tax planning sessions with me or someone of my caliber to help you lower the taxes that you pay. So that is all possible, and it must be done within that tax year. So right now is tax planning for 2022. So sometimes people think, oh, I'll wait next year to start tax planning. No, you missed your opportunity. You do the tax planning during the year. Let's see. Okay, looks like we clarified some of those talking points. And just this last area here, because as an investor, you make money. So how are they taxed? They are taxed on a scale based upon capital gains. So capital gains, in simple, short understanding, you have your short-term capital gains and you have your long-term capital gains. And what that means is short-term is you had that investment shorter than a year. So you held on to that investment less than a year. So if you bought let's just use stocks, for example, if you bought a stock in January and you sold it in August, is that considered short-term or long-term? Let's use the chat area. You bought a stock in January and you sold it in August. Is that short-term capital gains that you'll be subject to, or long-term capital gains? Does anybody know based upon my explanation?
Christina, in the chat, there's some guesses of short term, because you said the month. Can you say the month or the time frame again so we can all hear it?
Yes, so you purchased your your stock in January and you sold it in August, so you held it for 8 months.
Okay.
Does that subject you to short-term capital gains or long-term capital gains?
Good question. Okay.
And so from these responses, I see short-term. That would be correct because you did not keep it for a year or longer. So whenever it's less than a year that you held the investment, you're subject to short-term capital gains tax, which is going to be more. You're going to pay more holding it for a shorter period of time versus holding it longer. And unfortunately, I don't have a chart on this because I see moving forward that it's good to have me speak, but also a visual reference. And so that will be something that you can look up. You can just look up a short-term capital gains, long-term capital gains chart. And that would be great for those that are visual learners. And so when you hold it for a longer period of time, 1 year or more, you have the long-term capital gains. All right, I just wanted to highlight some dates to keep in mind when you are a taxpayer and there are certain things that are due. So March 15th, this is the date when your corporate return, your S Corp specifically, and your partnership business taxes are due. So that's that date for that. April 15th, that's the standard tax day. The past 2 years, they have extended it out into different months and days. However, the standard tax day is April 15th. And that's when your individual taxes are due, your self-employment taxes are due, your sole proprietors, that's when your taxes need to be filed, and your C Corps. So depending on the type of business that you have, it's key to know how you are taxed so that you file by the right deadline and not subject yourself to any type of penalties and accrue interest on any tax debt that you owe. Are there extensions for business taxes? So yes, there are extensions when it comes to filing. And this is a good point, and I want to clarify this. When it comes to filing an extension, the extension is only to file, and it's not to pay. So payment that is due is still due by the date that it is due, whether it's March 15th or April 15th, depending on what you're filing. So when you are filing an extension, you need to know if you are going to have a tax bill, because if you are, you need to submit some type of estimated payment with your extension to file. That can only be known if you did some tax planning or you get with a tax professional to help you calculate your projected tax bill that needs to get processed for payment so that you don't accrue interest on that while you're waiting to file or while you're trying to collect your documents to file. So extensions are 6 months to file. So if you're filing a return that is due March 15th for your business, then it is, what is that? September 15th is when that return needs to be filed. On April 15th, you get your 6 months, and you have until October 15th to file without any type of late filing penalty. But the interest will be there collecting every day until you pay that payment. And this is just another reminder to begin tax planning. You can start now for the 2022 tax year. I just wanted to highlight the standard deduction amounts. This may be another screen for you to screenshot so that you know how much standard deduction you get as a individual filing under the certain filing status. So we have 12,550 for single individuals, and for married filing separate, we have 18,800 for head of household. And we have 25,100 for the married filing joint and the qualified widowers. That's the current standard deductions, which has been increased. So I just want to highlight what those filing statuses mean, because I find that taxpayers are misclassifying themselves when it comes to how they need to file for their taxes. I just want to highlight this. And someone said, okay, I may have missed it because I was late, but can you specify head of household? Definitely, we're going to go through that. So single is unmarried individual, no dependents, meaning no children. It's just you, your income, and that is your filing status. Okay, that one's pretty self-explanatory. Head of household. This is the one that I see is oftentimes misclassified. And so I'm just here to bring you clarity. You can still decide to do what you'd like to do, but don't be surprised if you receive a letter from the IRS that they realize you have misclassified yourself. So head of household, you are unmarried, and that is legally unmarried, and it can be that you are considered unmarried, meaning you may still legally be married, but you and that spouse have separated. You are not living together. You don't commingle, you're not taking care of the household together. And you guys just haven't got to the point of actually submitting the proper legal documents for you to separate yourself from one another. Now, there's pros and cons to that for prolonging that process of legally separating. However, head of household, the key thing is you were unmarried or considered to be unmarried, and you pay more than half the cost of your home and for dependents. So that means you have a child or someone, you may be caregiving for your parent, and you provide more than 50% of their finances for their living. That can potentially classify you for head of household. There are some resources, and I'll make sure that I type this in the chat area. IRS.gov has many resources for you to fill out different questionnaires and help you identify what should you file, because it may change from year to year, especially if certain life circumstances has taken place. Let's see, OMG, is that a good OMG? Jordan.
I think it's just hitting, Jordan is in this chat.
I am in the chat, y'all, because I just have so many questions. I think sometimes we go into filing taxes blindly because we don't know like the terminology and what everything means. So we depend on the tax preparer.
Mhm.
But yeah, I just had some questions and you answered my questions. Thank you so much.
Okay, good, good. So
Listen, I
Mary,
have to tell y'all, Christina is the truth, y'all. She really is. She's giving the game. She's giving the nuggets. So ask away,
yeah,
because she is here to teach you. She doesn't have clients that aren't being educated consistently, and I know that's both of our approaches. We want everyone that we speak with to end up with the same knowledge we have. So please take the nuggets. Please ask your questions. She's here to share.
mhm, thank you. So we have married filing joint. So this is a married couple. And this is to be unified by the end of the year. So let's say you got married December 15th, 2021. And on your tax return coming up for the season, so which was the last, we're in that current filing season for 2021, because they were married before December 31st, then they have the option to file married joint. They have another option as well. I'll get into that second option, but they're going to be filing married. It's just married joint or married separate, which I'll get into on the next slide. And so when you are married, filing joint, both incomes are reported on the return. And if there are two incomes, of course, so all income would be reported. And you will get the highest standard deduction, which was that, what was it, 25? Let me look at my cheat sheet. Let me go back, because I'm human and I misquote things. Okay, 25,100 filing joint. Okay, so you'll get that standard deduction, which will help you lower the amount of taxes you pay on the money you earn. Right? Then you have married filing separately. Okay, so you're legally married, and again, you and your spouse have chosen not to file together. So what that means is you're filing two returns. The one spouse files their return, and the other spouse files their return. And you do not include your spouse's income on your return. So it's almost like you're filing single. If I'm just giving you an example, it's as if you're filing single. However, you were just reporting that you have a spouse, so the spouse's name and personal information would be there on the return, but none of their income. So when you elect to file separately when you are married, your tax credits and deductions are reduced. So you only get your 12,550 standard deduction if you are married filing separate. So that's the tax deduction you get. And one thing that I find with this category of married filing separate, oftentimes this type of couple typically doesn't commingle their money together, and they just choose, they may, in the financial household, they may have, okay, this spouse takes care of these bills from their income, and this spouse takes care of these bills. And there's no commingling, like there's no joint account. They kind of keep things separate, and that works for them, and that's fine. And so you have that option to do married separately. So that way you get what's entitled to you as a taxpayer filing separate, and the other person gets what's entitled to them. You have that option. And it needs to be agreed upon, because if you choose to file separate as in this union, and your spouse chose married joint, there's some conflict there. The IRS is gonna red flag that, like, well, I don't get it. What are you guys doing? You make up your mind, file joint, one return, all income on one return, married separate, 2 returns for each spouse, and you file your singular income streams for your taxes. Okay. And then the last,
I have a question on that. Have you, just from your own scenario and experience, would you find that happens maybe if the parties have children or divorce? Like, what might be some different factors that people might consider to do married filing separately? If you could just give a brief example.
well, with you bringing up the children, that potentially may prompt a couple to do separately. Let's say you have a blended household. I can
Mhm.
see that working out
Mhm.
for you and your spouse, where you're not doing a joint. And there are so many scenarios that can arise as
Child
to
support.
why and
Yeah.
which way.
Child support comes up a lot, so we want to name the elephant in the room.
Child support.
It does
So
come up.
on the receiver side, or on the
So
the person
child
that's
support.
receiving, or the person that's paying it? Because that's two different scenarios in regards to how you would want to handle that. So what I've seen in that's a tough one to get into, especially with the time we got for that's a whole tax analysis appointment that
Good.
we don't have time for. But one thing I will say specifically about child support is if you are let me do this as simple as I can. Head of household, I'm building this return for you guys. Head of household. We're not going to even include a marriage in the union. Your head of household, the man and the woman, right? And when that's the case, there has to be certain documents in place to support how you're filing. Meaning, if there's custody things in the mix, meaning under the tax section of that custody, what is laid out there? Is it alternating years? Is it only one person? That does get complex. And to avoid rejections of your return from being when you file, you need to have some type of communication of what is happening amongst your union or your partnership of co-parenting as to how taxes are going to be.
Yeah.
For the most part, there's always one primary person that claims it.
The children.
Usually the person, when I say it, I mean the child, my apologies. The person that is claiming the child is typically the receiver of the child support. And the only thing with that, so it's usually a common understanding in that type of scenario. That person that has the child who is receiving the child support, they are going to claim that child on their return, and the other person is not going to claim that child on that return, or they may alternate. So there is a publication for those of you all that are really in need of clarity, and you're not ready to maybe book an appointment with me just yet. You can look up IRS publication 503. I will type that in the chat. And there's 501 as well. And so that's going to talk about your child dependents, your child tax credits on the 503 side. On the 501 side, that is your basic outline. And I should be able to just show you what that looks like here if time allows. I don't think I have too much more to dive into. So we should be able to, let me check the time. So just for the ABCs of our tax tips,
Mhm.
I just wanted to give you these bullet points here. A, annual tax planning. That's going to be key. B, build your tax knowledge. So attending workshops, finding a favorite YouTube tax professional that you go to, connecting with me, having me as your ongoing tax advisor. And C, I want you all to consider having a business, because that is just really going to unlock the door for you to claim tax write-offs that you don't have access to as an employee, as a W-2 earner. And so even if that is simply, let's say you are a secretary and you do that full time with a company, maybe you can offer some virtual assistant services. So it's like you're doing the same work, you know how to do it, you're excellent at it, and you're just finding out a way to monetize the services and skills that you have for tax reasons, because you know it's going to help you with taxes. All right. And let's see what else we have. These are just three common ways that people file taxes. I am under the impression we have a well-versed crowd. So you can get with a tax professional. You can do it digitally by finding an online tool or app to provide your return electronically, or you can go online and print out the forms needed to paper file and mail out your return. Everyone has their preference on what they do. The key thing with paper, for those of y'all who are still mailing out your return, you want to track that return. So get a tracking number when you mail it out, so that way you can check, make sure it's received, and you have proof. No, I sent it out to you all, and you're not going to hit me with that penalty because I know that I sent it and you should have received it. So that's how you're able to fight and advocate for yourself when you are hit with some type of unforeseen penalty because they're saying they didn't receive your return. Right? This is another screen you may want to screenshot. That QR code is to my appointment scheduler for tax services, even for business services. You will find that there. I am local here in the city of Lancaster. Again, one of the only female IRS approved tax firms here in the Antelope Valley in Greater Los Angeles. And so all in all, I help taxpayers and business owners connect the dots from business taxes to money. So you have officially completed the tax toolbox.
Yeah.
And we've completed our fourth session. I'm gonna pull up the IRS website and just give you some quick tips on how to access resources. If you are still in need of just a guide, because that's where I go, honestly. And that's the main place where I refer my clients. I don't care what TurboTax is saying. I don't care what Bloomingburg reported. I want to see it on the IRS website, and that's the only thing I believe and trust. Okay, so I'm just going to get out of here. Any other
I have, while you're looking that up, I would love to hear if there was one thing that you learned or took away. It could be even a new terminology or word. What is one thing that just is really going to stick with you, from attending today? I know for me, it's DBA. I feel like I have a much greater understanding of the DBA. But if you'd like, I know Christina and we enjoy getting feedback and just, hearing what knowledge was shared and what really stuck with you in your heart. So if you could share either one word or a phrase that stuck with you, what would that be?
What stuck with me was that when you are doing business as a DBA, that you're
Mhm.
taxed twice. That's huge. And I never knew what income tax bracket I was in.
Mm.
That shows the lack of information or that we seek as consumers. So this was exceptional. Thank you.
Absolutely. Thank you so much. If
Ladies,
anyone else?
yeah, if you have any more comments or suggestions or just wanting to say thank you for all this great information that Christina and LaQuenta shared for this series. We are at time, so I don't want to keep people any longer because we are at time.
Yeah.
But I believe you have their contact information.
Mhm.
And if you have any more comments, go ahead and type it in the chat. But reach out to, because this is pertinent information, especially a lot of families need to know this. If you have a, they call it side business. Christina, thank you. Thank you for sharing what we need to do on, yeah, come on, give it up, give it up. Because so many times, especially as moms, we have our little, paparazzi or a little natural herbal business we try to do on the side. We need to know the real, what we have to do to file taxes. How do we accumulate wealth on this kind of information, make sure we're filing correctly. But I don't want to exert the time because we are at our time limit. But again, if you all could throw up an emoji saying thank you to both LaQuenta and Christina, and how much you appreciated that information.
And we have been recording the session, so this will go out to everyone who's on the call. So you can also share the video with friends and family that you think might find this useful. So keep that in mind as well. We'll be sending that out to everyone.
Yes, and if you haven't signed into the sign-in sheet, it is in the chat. Please make sure you sign in. We want to make sure we capture everyone's information. Christina left her her website information in here as well. What is this one for, Christine?
That's my appointment scheduler.
Okay,
But
awesome.
maybe I can send that to Tracy to include.
Yes, please.
Please do,
We
Christina. No
We
problem.
got it. We got it.
All right.
All right. Okay. I want to thank you all for giving us an hour and a half of your time on a Saturday morning. You could be anyplace else, but you chose to tune in to be with us today with your coffee. Got some great information. You got some updates and things that you can share possibly with family and friends. Go to our website because we're uploading that.
Real quick, did want to, we had a comment, iPhone 12 asked a question. The sign-in sheet was just put into the chat, Jordan. iPhone 12 asked, will there be a second round session of the Toolbox? Currently, there were the 4 sessions right now. So these are all standalone, and so they're all on the web, and this will be 2 on our YouTube channel. We might have something in the future, but as it is now, this is the only one. So there are the 4 financial literacy that were this past 2 weeks. So that's and I'll put that, actually I'll snag the YouTube channel for you all and put that into the chat so you can see that as well.
Awesome. Thank you, Tracy. Thank you.
No problem.
All right. Okay, everyone.
Take care.
Listen, you have an awesome, have an awesome and wonderful Saturday weekend. Be safe. If you're in the Antelope Valley, enjoy the sun and the nice weather before the wind kicks back in and we go into another whole seasonal change. Wherever you are, enjoy your day. And again, thank you, Christina and LaQuenta Martin. You guys rock. You all are awesome. Thank you so much.
Thank you, everyone.
Thanks, Tracy. Thanks, Darrell.
Thank you, Adele.
Bye, Adele.
Everyone enjoy the last Saturday of April.
Yes. Bye, Tamara.
Bye, everyone. Thank you for
Bye.
being here with us.